Hello traders everywhere, Adam Hewison, president of iknow.com and co-founder of MarketClub with your midday update for Friday the 16th of November. No more Twinkies, kind of a sad thing. This is not a public company, but it's really a little part of America that we lost today. Hostess Brands that owns the Twinkies and wholesale Wonder Bread and a number of other very important brands basically closed down their shop today. Laid off 18,500 workers, many of them union workers who wouldn't bend, didn't see the reality. Now that everyone's lost their job. Is that stupid or what? But anyway, yesterday we talked about the news and how important it was to the markets, but it was secondary to what we talked about, and that was the markets tell you what's going to happen before it happens. And what I mean by that is Apple's a perfect example. If you remember, Apple was the darling of all the hedge funds, all of the professional money managers. It was going to $1,000. It was traded up as high as $700 in late September. And it was the most valuable company on the planet. Now here it is 2 months later. It's barely hovering over $500 a share. What happened? Well, I think it doesn't matter what happened. The reality is the market went down based on perception. And it's interesting, we had signals on the 2nd of October. We received a signal. In fact, let's take a look at Apple right now. So you will, as I talk about it, you'll actually see what we're talking about. So let me go to the portfolio because I put Apple in already. There it is. And you can see basically, let's scope this in so we get a couple of years with. So there it is. There's Apple. And let's put our weekly in. And let's scope that just a bit closer. There you go. So here we are. We are trading at this level right here. And this is over $700. I'm just getting my telestrator on here, so I'll show you. So here we are. We're trading over $700 a share. The most valuable company on the planet. Okay? And then we get a signal right here at 656. So this was basically 656 exit. Okay? Now, did we know the market's going to close down this far and come under so much pressure? No, we didn't. But the reality, this was the first warning sign. And as we'd already purchased right here, we actually had a very nice profit. So why not take the profit and stand aside, let the market tell you what it wants to do. And then here, on the 2nd of November, we receive a major signal. Now, the major signal came in at 587.70, and that's the first time we've had a signal since July 7th, 2011. So these signals, these major signals do not occur every day, and when they occur, you have to pay attention to them. And look what happened. Went from 700 right here, a little over 700, down to that's a $200 drop in a share. Now, is Apple still higher for the year? Absolutely. But has it lost a lot of its glitter? Absolutely. You've got a lot of hedge fund managers, a lot of money managers still have Apple. It was a core holding for a lot of people. They were just basically jumping out of the ship, so to speak. But the reality is this all happened before the news came out of the rearranging the upper management at Apple, all the competition from HTC, some of the other smartphones, smart tablets and so forth, Kindle, you name it. Tremendous competition in this space because that's where the market's going. And Apple had a lock on it, really, with the iPhone and the iPad up until about this time. And then the perception changed. The market came down, signals at 656 right here. And again, we had a signal at 587, which is right here. And we're currently trading at 528. So what is that? $60 lower from the original signal, and almost $130 lower than the other one. So again, perception matters. The trade channels help you decipher what's going to happen in the markets. Very, very key to being successful. Not listening to the news, but acting on what the markets are telling you. They know the news before the news people know the news. That's how it works in this business. So let's clear the screen off. And let's go back to our portfolio, and let's start off where we normally start off with the S&P 500. Again, negative trend in this market. You can see we put the triangles already in, and you can see we had a signal at 1354. Market's at 1360 right now, not a little bit higher. It we've obviously come down a lot. I mean, there's no question about it. We're down dramatically from the double top we formed here. We talked about that before, the double top, the pivot point. Look where we had the signal on the weekly at 1430, still substantially higher than we are right now. To exit the market, not get short, just exit the market and wait for a signal to get back in. Now, we have not seen that signal, even though the market's higher today, but let's look at the weekly charts because that's something we'd like to do. And you can see we're still lower for the week right now. And I would guess we're lower for the month as well. So there's no reason to suddenly try to pick up, unless you're a very short-term trader and very nimble, there's no reason to try to nibble at this from the long side. All of our trade triangles, monthly, daily, and weekly, are all negative. And that's the key there. So let's go to our next market. That's going to be the Dow. Dow is also showing a little bit of strength today. It's very, very oversold. But you can see basically it's sharply lower for the week. And that's the key thing to look at. We've finally gotten into oversold territory right here. Okay, that's the last time we saw that was back in May of 2012. And if we scope this out even further, we'll see, let's just go a couple of years. So you can see you don't get that it's this far down that often. But what you wanted to wait for is wait for some sort of turnaround before you get excited. Now, this just turned down. The MACD just turned down. So there's no reason to stand in front of this freight train. There really isn't. So be careful about that. So looking at NASDAQ, much the same there. We've got a very strong downward trend. Remember, NASDAQ was the leader simply because of Apple Computer. That was a large component here. That's still minus 90. The weekly's down and the monthly's down. Everything's negative here, and we're down for the week. We are oversold? Absolutely. But can it go lower? Absolutely. So again, we are turned down here. We're still losing momentum. There's no reason to stand in front of this market. And again, you're seeing a little bit of a pop because we're coming to an area where it should find support. Look at where this, let's scope this in just a little bit higher. So you came down to these levels here, and you can see down towards these levels we have had some activity. So it wouldn't be unusual to see it maybe go back up to 2,900, even 2,950, and still really be in a bear market. And that's the key thing to remember. This is not going to turn around and just suddenly shoot up. Even if so what may happen is the fiscal cliff may be resolved, may not. If it's resolved, we'll probably see a little pop in the market. But the reality is that's all it's going to be for the time being. It's going to take a lot to repair this market. Look at how oversold this market's been. Really under pressure since this time window here. And we're looking at just around the September, it started coming under pressure, and it hasn't stopped. So I don't think there's any reason to jump in this. As I say, this reflects Apple so much. Is made up of this index, so I'd just be careful in this. So let's go to our next market. That's the Eurodollar. Now remember the Eurodollar, we talked about the 128 being a really brick wall, and we talked about it, and we've rhapsodized about it. We put the lines in here so you actually see where this is. And you can see yesterday we traded, let me just get that closer for you. You can see yesterday we traded up to 128, returned back down. We're 127.23 now. And if we look at this on a daily basis, weekly basis rather, you can see we're barely higher for the week, just barely high. And we may actually close lower for the week. So nothing to get too excited about in this market. But I'm going to show you a market later on that is bullish that you will want to participate in. And I'm very excited about that. So let's go back to our daily chart. And let's go to our next market. And the next market is going to be crude oil. Now, crude oil is beginning to look interesting simply because, let's just put the 3-month chart on here. You can see we've basically been moving sideways really since about the middle, maybe late October, all the way sideways, 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 sideways. The key here is going to be the high level we reached at 89.22. If we go over 89.22 anytime in the next week or two, then we're going to start turning up and see some positive things going on. But crude oil is higher for the week, and that's a key thing. It's one of the few markets that are higher for the week. So again, pay close attention to this market. It looks like we potentially could be making a base. The situation over in the Middle East is very fluid, and of course we've talked about that being the wild card is the Middle East. We have no idea what's going to happen there, and it is pretty scary if this thing escalates and we see Iran come in to this fray and everything points towards Israel. So I think it could be very, very dicey. And if there's a question mark on the oil, it's going to be right here. This is going to be that's going to be the line in the sand. It's I think we said 89.22 over there. Then we're off, and we're going to see this market run up rapidly. So let's see what happens. But a little bit of a mixed picture. 65 is a trading range, and we should respect that. We're not in overbought yet. And if we clear this up and go to our market down here, you see we are positive on the MACD, and it looks like it's trying to make that turn. And of course, later today we may see more strength in that market. Looking at gold, gold is very interesting. It's down for the week. Many people thought this should have been higher for the week, but it's down for the week. And if we just put a 6-month chart on, you can see we're currently trading at 17.15. We closed at 17.30 last week, so it's down about 30 points, 15 points for the week. But if you look at the close up and we put our Fibonacci in here, and the reason that we're bullish is because longer term we're bullish because of a long-term monthly here. But if we put our Fibonacci in, we've had a 50% pullback, which is a classic Fibonacci, 50 to 61.8% pullbacks in these markets. And if you remember, we're looking for this market to come back down to the 1705 level, and because of the Fibonacci numbers. And I think we're just sort of biding our time here. I think we've corrected from a very overbought condition. And if we go lower, you'll see that the MACD is still positive on gold. What we're looking for now is we put this in our notes last week, or earlier this week on our show, and that is the 1738 level. That's the key to us. If we see the market go over right here, this is the level, then we're going to see this market really start to accelerate on the upside. And it could be a number of items that could cause that to happen. It could be no situation solved on the fiscal cliff. It could be problems in the Middle East. It could be any one of 1,000 things. But the reality is you've had the move up. We're coming back down. And it looks to me like we potentially could be building this sort of rhythm to push this market higher. But this is definitely the area that you want to focus on. If we go over that, we're going to see this market trade over $2,000. Big next stop is 1,800. That's the big line in the sand, of course, and that's going to be a big stopper on the upside. So let's just clear the screen. I'm going to show you a bull market in just a second, so just bear with me. I think we're very excited about sharing that with you, and it's one that may surprise you. Copper is pretty much the same thing, kind of flat here for the last 10 days or so. And the big number there is 355. It really needs to do something. But longer term, it looks positive. Intermediate term, it looks a little bit more positive. But it's really a question mark on the economy, because copper is driven by the economy more than anything else. On silver, silver is plus 100. Big surprise there. So let's just take a look at silver, just 6 months here. You can see it's just building this very similar pattern to the gold, except it's maybe a little bit ahead of gold with a weekly trade triangle, which occurred 4 days ago rather. Now, if we see the market close over 33 today or next week, then I think we'll see this market really sort of jump up and move up to the 35 area, which is the next line of resistance. Now, I promised you to show you a bull market, and I'm going to show you the bull market right now. And what it is, it's, well, we've done Apple. Let's say it's a U.S. dollar against the Japanese yen. Yeah, that's right. We're suggesting you should be buying this market, basically buying dollars, selling yen, shorting yen. And here's the reason why. Let's just scope this out just a little bit further. That's a 6-month chart. But look at this. This is a tremendous pattern. And if we just get our trend lines in, if you just take this trend line across here like that, look at how much you've broken out here. You've got this huge base right here, and you've broken out above there. So let's say this. You could then measure, because you've broken out to the upside right here. You could then measure from this point here, 77.50, to the breakout point, that's 80.50. And let's subtract this from here, and that gives you 3. Add this to this, the 80.50, and it gives you 83.50, and voila, look where it comes. Look at where it takes you. right towards these previous highs. I think there's a very, very good chance this is going to happen. I would say any pullback to the 80-50 area, 80-75 level should be a purchase, but it looks really, really good. I like the way this market's closing for the weekend. So, hey, I'm Adam Hewison for Market Club. Thanks for stopping by. We appreciate you using our service, and if you have any questions, please give us a call. You can reach us on toll-free at 1-800-538-7424. Have a great weekend, everyone.